Hi traders, welcome to this live currency strength indicator table video with me John on this Tuesday the 27th of June. Here you can see we have our tables in front of us. It's still showing us that the Canadian dollar is one of the strongest currencies at the moment and that we should be focusing our attention on that currency against the likes of the Australian dollar and the Japanese yen. So no real changes for us. We were looking at CAD yen longs. We're still in a CAD yen long position. At the moment, we are currently running around about 65 pips in profit. We're still looking for a move to the upside here. Now, just a little bit of a caveat with the CAD today. There is some data out. We've got a Bank of Canada deputy governor speaking, and we also have some CPI data out in the afternoon. So we have to be a little bit cautious of the Canadian dollar, but maybe it will give CAD a little bit of a push. Now, we did also talk about Aussie Swiss yesterday. If you are in Aussie Swiss short, you should be in profit. Now, we'll go over this one. I actually took myself out of this trade for a loss, so I am going to explain why I did that. It's basically me being a little bit early to jump the gun, to be honest. I looked at it this morning. I saw that the Swiss franc had come off our trend traders table, and to be honest, we had broken through a couple of areas of resistance, and I got a little bit jumpy and took myself out for a small loss rather than letting it play out. And if I'd let it play out, we would be back in profit by about 10 pips at the moment. So let's talk about that first. We're looking at Aussie Swiss here. We can see that we were looking at some further downside in the market. I've got this trend line resistance in here. I also have this minor trend line resistance, and that is the one I was talking about being broken. So if I go to the hourly time frame, you can see that our entry was around about the 0 spot 59.90, which is around about this level here, just where that 50 moving average kind of intersects with price. Originally we had about a 50 pip stop loss on this move, so I was well within that stop loss area, and to be honest, I've just jumped the gun slightly. What I should have waited for was to see if this actual breakout of the higher time frame trend line was sustained. And you know, the reason why we use these ATR stops is to put barriers in the way, right? So we've got these highs in here. I've got that big level that I was just talking about. I've got the trend line resistance. So I'm giving the market the sort of breathing space that it needs to in order to potentially create a profitable position. But I dropped the ball on this one, to be honest. I should have been waiting for price to break more than these barriers, and my stop loss was in a safe place. So for me, really, I've messed with this with a little bit too much. But what I would say to you guys, if you are in this position at the moment, the Swiss franc is still S2 on the day traders, so this is still one that you could hold for further downside, and I will be monitoring it because I still think that price may potentially come down to the 0 spot 59. Just me having a little bit of a mistake there this morning, probably jumping on it a little bit too soon before the open was the wrong decision there. So, but I thought I'd be honest and just tell you that I've closed that position in a loss, a 25 pip loss for me. I closed it literally right at these highs here. So yeah, I was about 25 pips offside when I closed that position down. So could I enter again? Potentially. I'd rather wait for the Swiss franc to jump back on the trend trader side, see it come back below the resistance again. So what I'm really kind of looking for now is if price did something like that and we got like another sort of lower high, then I probably would jump back on it if we did see the Swiss franc jump back on the trend trader side of things. But like I said, Aussie Swiss still there at the moment, so nothing to complain about. If I go over to CAD yen, we're still, like I said, we're about 65 pips to the good on this one at the moment, and yeah, we're looking for price to continue to our targets. Now I've put the target in at 109.75 for me. I'm looking for price to continue up. My stop loss actually on this trade is just above break even at 108 spot 80. We got in down at this level, so our entry price was 109.75. So 109.75 was about here. Okay. Looked at basically getting in around that level. I put my stop loss to break even now, so 108.80, and I'm just letting this one play out. Now stops are at break even, we can kind of let it try and do its own thing. Now we do have lots of CAD data, like I say, so we may spike down today. We may come and hit the 50 MA again. We may even come and retest the 109 before price heads higher, but I won't be adding any more risk onto CAD positions for today. That being said, Aussie CAD was the top of our day traders table. I was looking at short opportunities on this market, if I just expand it out. Now, if we look at it from the daily chart point of view, we can see we've come back into these previous lows. We've broken below the zero spot, 88.25, and I'm looking to see if price will come back down to sort of the 0 spot 86.50 or 0 spot 86 handle, which were these lows that formed back in September and October of 2022. My only issue with this market is entry points, right? So if I'm looking at it from an entry point here, if I just actually bring in the 50 moving average, we've got multiple sort of levels of confluence. We've got the 88.25, the 50 MA. My only problem is this: if I was to short, let's say we shorted on the break of the 50 MA, where would my stop loss go in a safe place, and where would my target have to be? Well, my first target was always the lows, and that's just way too close to current price. So the risk to reward ratio there isn't good at all. So I would rather see price pull back quite a large way before getting involved with this. Now, if you look at the 4-hour time frame, instead we've got the 89.50, we've even got the 89 handle just running through this area in here, and that's where I'd be more inclined to be involved with the market. Now, that being said, if we did see price continue and break through those lows, then it would open the door for a bit of a move to the downside. It's just that short in there, we're very close to that support of those lows. Another chart of interest then was, if I just move this over, was actually euro yen. So you can see euros coming on tables now. Euro's the third strongest currency, and we had a little look around. Euro yen looks quite good in terms of seeing price trade to the upside. Now, if you remember rightly, we talked about euro yen not too long ago, and we actually looked at getting long down in at this 155.25 handle, and we were talking about getting long at least back into the 156. So if we did manage to take that position in there, that would have been the one to watch, and you would have profited nicely on that position in here. Euro actually came off the tables at this point, which made it a little bit tricky. I actually closed the position off, and unfortunately for me, then price has then since rallied. But could that offer us another opportunity on the euro yen price? I can see if I go up to the weekly time frame and just zoom out, we've been talking about the 159 handle, which was these kind of clusters of support and resistance within this weekly area of this consolidation pattern. So 159 was our targets, and it looks like we could still see 159 coming into play. Now, what we do have to look out for is what price is kind of doing now. How could we potentially enter this market? Well, we've got sort of trend line supports running through. You can see these trend lines getting a little bit more accelerated here, which is good. We want to be in a strong bullish move. We also have obviously these highs that were used as resistance now could turn into support. So you've got this area down through here around about the 156.65, which could be a good area to look for an entry. So if we were looking at 156.65 for instance, which are in and around these highs through there, we're looking at 122 pip stop loss, which can bring us below these lows even. Let's say we went for like a 110 stop. To then get to the 159 is still a really good risk reward ratio. So I'm going to be looking for that as our potential chart of the day, looking at euro yen for long opportunities. Reason being, although Aussie CAD is the highest on the day traders table, if we just bring that back in, although we are you know, at that point, like I said, the resistance is a little bit, or sorry, the support is a little bit too close to current price for my liking. So I'm going to be looking around at other markets, and obviously yen is still weak, despite the sort of rumors that there could be a Bank of Japan intervention. We still haven't seen anything yet. So, you know, we still should stick with that until that potentially does come to an end. And euro yen, we can probably get a safe entry down towards these lows, because that's the other thing. I don't see a safer entry on these markets than this one at the minute. Obviously, if you are still running Aussie Swiss to the downside, you're in profit, which is good. If you're running CAD yen longs, you're in profit, which is great. So what I would say is you want to free up a little bit of risk before you jump into another trade. Bringing your stop loss to break even on CAD yen can open that door for you. Or, you know, maybe you want to bank CAD yen and open the door up for a euro yen, or maybe you even want to consider just banking half on CAD yen, moving your stops to break even, and then using that risk allocation elsewhere in the market. So hopefully you enjoyed all the content, and I'll speak to you in the next video.